Welcome back. Well, one segment which is doing well in the market today is the chemical space. Stocks like Neogen Chemicals, you have Akella Mines, Balaji Mines, all of them are surging in trade today. Generally, the chemical space has been in focus, but what are the trends looking like? What is the pricing scenario? And is demand coming back to the space? To discuss this and more and understand the industry trends, we are now joined by Abhijit Akella of Kotak Institutional Equities. Abhijit, good morning. Thank you so much for joining in. Most of these companies spoke about a recovery coming by in the second half of FY25. But going by the trends that we've seen so far, is it fair to assume that would get delayed? Is there still pressure on demand and pricing?
Yeah, good morning. There is indeed. So I'm afraid the challenges don't seem to be fading away very quickly for the chemicals industry. I think it's not just a function of the weakness in demand, which has been in vogue for the last few quarters because of destocking. But compounding matters is the fact that Chinese competition has expanded capacities very, very aggressively in the last 2 or 3 years. And that entire overhang of capacity creation is kind of weighing on the sector as well. So pricing remains depressed, which perhaps is making customers relatively more reluctant to place orders and restock. And at the same time, there are concerns around the macroeconomic environment as well. We've already been, looking beyond the destocking. We are looking at kind of weak economies, across China, Europe already, plus the US economy also seeming to show signs of slowing down heading into next year. And in addition to that, when you look at other macro parameters that are important to, say, segments like agrochemicals, such as, say, crop prices, for example, those have fallen quite significantly. So that's not a good sign either. We are actually seeing some of the global majors such as Syngenta looking at job cuts now, which kind of indicates the stress the global sector is in. And I guess the other wildcard to just watch out for is what happens post the US elections in terms of tariff actions. In particular, if there is a Trump administration, there's a considerable amount of fear that there could be significant tariff barriers being imposed, not just against China, maybe even against Europe and certain other countries. Maybe even the Harris administration might take some punitive actions in that regard. So lots of uncertainties actually when we look out over the next 6 months or so.
So when you speak to the companies, are they expecting prices will further go down from here on since dumping is continuing and demand is weak?
Pricing does not seem to be going down from these already depressed levels. It's probably bottomed out in the last few months. It's already been maybe about 6 months or so since we've seen the bottom of pricing. But we are not seeing a meaningful recovery in pricing, from these depressed levels either. Maybe in certain pockets, there's been a little bit of a rebound. Like if you take, certain commodity agrochemicals such as, say, a glyphosate or maybe an emamectin or some of the triazole fungicides, maybe a little bit of a bounce. But other than that, nothing major really. I think customers still seem to be a little bit in wait and watch mode. And at the same time, all this overhang of excess capacity has been created. So I think the outlook going forward is pricing perhaps remains around these levels for some time to come. And what the industry is really banking on is a recovery in volumes. Unfortunately, it does not seem that the recovery in volumes is going to be very sharp or V-shaped in nature. It's going to be a rather, protracted kind of gradual recovery.
Okay, so volume recovery will not be sharp and prices could remain stable as well. Abhijit, in that case, are these listed companies delaying their capex plans? A lot of them, be it SRF, be it Navin Fluorine, Gujarat Fluorochemicals, all are looking at big capex plans. But is there a delay which is expected?
Not, maybe in certain specific pockets, maybe a little bit of that is happening. But in general, no, not at this point. So I think the companies are kind of taking the view that, there will be a recovery maybe in the back half of this year. It does seem likely that that expectation might slip a little bit. We are probably looking at revival only in CY25 now at the earliest, and that too with limited visibility, to be honest. So to a major extent, I think the capex plans perhaps are still on track, but at the same time, there has been a little bit of pushing back, a little bit of delaying at the margin. So, I think the companies perhaps are also kind of playing it by ear.
Okay. One theme that has emerged recently is battery chemicals. A lot of these companies, we spoke to PCBL, there was Neogen Chemicals. A lot of them have spoken about big bets in the battery chemicals business, be it Avni Organics, Aether Industries. Do you think that pivot is something that these companies could look at and that diversification is something that could provide additional opportunity, or it will be par for the course?
Battery chemicals, we are actually positive on that opportunity. We do cover Neogen chemicals, and we've been positive on the stock. So it does seem as if there is a promising opportunity emerging in that segment in the next, say, few quarters. And Neogen does seem fairly well placed to capitalize on that. So certainly something to keep in mind. And then just broadening the discussion a little bit further, opportunities do exist in areas such as import substitution or maybe even certain export-oriented chemicals. So it's not as if there's a dearth of opportunities out there for the Indian industry because the companies are still fairly small. But I think the point worth emphasizing is in this environment where the Chinese have become extremely aggressive, it's important to differentiate. I think it's companies that are able to do differentiated, maybe specialty-oriented kind of work. Those are really the ones that have been able to weather the storm relatively better compared to companies that are perhaps more directly competing against the Chinese in maybe commodity or generic products. So I think that's the broader theme to bring out.
And this weakness is across chemicals, and that includes agrochemicals as well, even in India and globally, because I was reading a report on Dhanuka. So even in India, we are facing issues with agrochemicals now.
The weakness is indeed broad-based. The capacity creation in the industry has been very broad-based, right from petrochemicals down to agrochemicals and pretty much anything that is not very differentiated or say not patented or exclusive. There, I think in general, there's been a piling in of new capacity. So that is very broad-based. Now, I mean, with regard to the point about the domestic industry, I think that's perhaps more a function, at least in the short term, of what's happened with the monsoons and everything. Just given the fact that there's been such erratic rainfall across the country, floods in certain pockets and drought in others. So that probably has not been a very happy kind of time frame for the Indian companies. So we'll see how the results shape up once the September quarter earnings come up.
Definitely, because this is a sector which sees a lot of interest, and the recovery pathway has been very slow across names. What would your top picks be here, Abhijit? Somewhere where you're seeing valuation comfort after whatever we've seen in last 2 years?
Yeah, so Neogen actually is one of them. So we are kind of betting that there will be a spurt in growth and earnings come the latter part of fiscal 25. Once the battery chemical capacity start to get sweated out, as capacities from the likes of, say, Exide and Ola and the others start to come up. So that is one. We are also positive on Godrej Agrovet, which we think is relatively more reasonably valued in the agri space. We are also positive on Godrej's subsidiary Aztec Life Sciences, which we think is quite a promising play on the CDMO opportunity in agrochemicals in India. Besides that, there are other interesting growth stories in the sector as well, such as, say, a Clean Science, for example, among those we cover. I think the only caveat I would like to put out there is that valuations in a lot of cases still seem a little bit in exuberant mode. I think the street perhaps hasn't completely recognized the fact that this competition and the capacity overhang from China is here to stay for some period of time. And it's not going to be very smooth sailing for companies that do not differentiate themselves in terms of products and offerings. So I think that valuation angle is perhaps something I would urge people to pay more attention to.
Okay, all right, Abhijit, thank you so much for joining in today with your insights and take on what's happening in the chemicals industry. A very important sector to look at, and looks like recovery is still some time away, something very different from what all the companies have told us. Second half is what they said, but looks like it will not be before calendar year 2025 that some recovery would come by in this space.
Well, let's hope that plays out, right? Because the recovery hope is getting pushed out further and further for these chemical names. But it's a great conversation. We'll get into a break. On the other side, we'll talk commodities. We'll invite Manisha Gupta.